Okay, and welcome back, students who are taking financial accounting. And in this series of videos, we are working on the assigned homework problems for Chapter 6, the short exercises. And we did number 11 in the last video, so we're on number 12. I'll see if I can't, let me just take a quick look. Maybe I'll see if I can't get through the last three in this one video. If not, there will be just another one. All right, 12. Accounting terminology. Place the corresponding letter of the definition next to the term. Okay, so let's see how we want to do this. Let's look at the definition and then find the term for it. So, an audit opinion that brings attention to special circumstances. Okay, so we're looking for audit opinions. So we have an unqualified and we have a qualified, and this one has attention to special circumstances, so it has to be number 8, a qualified opinion, because unqualified is clean, but qualified is good except for special circumstances. Okay. Accounting standards used by FASB and used in the United States. Okay, so that would be generally accepted accounting principles because it's being used in the United States. Auditing standards developed by the AICPA. That would be generally accepted accounting standards, so that's C for number 10. Issues accounting standards that are used in the United States. So who is doing the issuing? That would be FASB, so that's D. An audit performed by an independent CPA, right? That would be 5. It's an external audit. An independent third-party CPA. Just as a quick aside, let's say, it is possible to have more than one CPA firm looking at your books. Like, let's say, for example, you have somewhat of a mid-sized business and you have an accountant as a controller, and you have a CPA, do the taxes for whatever reason. Now, granted, that CPA is a third party to that business, but if there's special circumstances, a business may be required to have a different accounting firm, audit the books also. Okay, so it's like an extra level of protection. It rarely happens, but just be aware that it can happen. It's not like everybody has this preconceived notion that I have my bookkeeper and my accountant inside the business, and then we go to the CPA, and that's the end of the number of people that need to look at our books. That's not the case. I mean, sure, generally the CPA is that independent third party, and you don't need to go beyond that. But when you're talking about a lot larger businesses, it is possible to have more than, or let's say there's a takeover of a business, okay? Then there's two parties, the party A and party B, each one having their own independent CPAs who can look at that that set of books. So just be aware that it's you don't think that just having one CPA come in is all that can happen with a set of books. You can have multiple CPAs looking at it, or multiple CPA firms, I should say, looking at it. Right, F, an examination of the financial statements. So that would be an audit, right? An accountant who is licensed to practice by one of the states. That would be a CPA. Okay. Issues accounting standards that are utilized internationally, right? That would be IASB. An audit opinion that states that the financial statements are fairly presented. That would be number 1 here. As a qualified opinion. And international accounting standards issued by the IASB, and so that's the IFRS. Okay, If you don't know what all of these here acronyms stand for, an acronym being, the letters, right? If you don't know what they stand for, that's something that you need to quote unquote memorize, from the textbook. Um, when you're in the workplace, you don't really talk about, the IFRS or, FASB. But when you are talking about, talking to other, or in a CPA firm, or talking, in that realm, then these acronyms, knowing what they actually stand for does make a difference. So at the very least, memorize, what they all stand for. Okay, let's see here. I'm gonna try. Yeah, I'm gonna try to finish off these last two in this video. Sarbanes-Oxley Act. It's important to know what, or have a general idea of what the Sarbanes-Oxley Act is. When that act came into play, it did change a lot of things. So, read over that section in the textbook. It says, what are the main provisions? All right, be specific. Look at the solution, because it provides a pretty good breakdown. I mean, it says, it applies to publicly traded companies, which was the main reason for it. That's why it came about, because of cooking of the books. I mean, think about Enron and Qualcomm, right? So that's why it came into existence. It establishes the Public Company Accounting Oversight Board, right? So this was also a way to help, if you're going to control something, the government says you need to have some kind of oversight committee. That's what the PCAOB is. It requires that external auditors report to an audit committee rather than to an organization's management. That's like a separation of duties, right? Instead of just going to management, right? Now you have to go to an oversight committee. And I mean, think in politics. They always have oversight committees. As a way to make sure that everything is on the up and up. And prior to Sarbanes-Oxley, the external auditors often reported the company's upper management. And in the case of Enron, that allowed them to just, destroy the company, cook the books, okay? Because the accountants were in on it. Now, previously, the accountants were supposed to have they were like God. It was squeaky clean. I mean, they could be trusted. I mean, when you were CPA, you were, there was no question. But, there are bad CPAs, okay? And, that was, in that case, they were talking to upper management, and, Enron and Qualcomm, they went under. And that's why you have now reporting to an oversight committee to add that extra layer in there, in order to be able to, now try to keep the accountants on the up and up, because they're not as trusted as we thought they were in the past. It's not to say that, I mean, the CPA reputation has been tarnished, but it doesn't necessarily mean that, when you look at your CPA, you think that, oh, they're bad. No, the vast majority of CPAs still, have that solid reputation of being trusted and reputable, okay? And they're doing the right thing. But just like anything else, there's going to be some bad apples, okay? And this is to help, deal with those bad apples. And it requires the company's CEO and CFOs to certify all annual, quarterly, and reports filed by an organization. To have the CEO and CFO, along with the CPA, sign off, that now causes them to say, hey, I know what's going on, okay? in my organization. I'm taking ultimate responsibility, and granted, that CEO may have no clue because of what's, they may not have any clue of what's in those financial statements because they're relying upon that CPA. Okay, but where does the buck stop? Okay, well, the buck stops with that CEO or CFO and not just the CPA. All right. Okay, so that's that problem. And last one, 14, describe the major differences between GAAP and IFRS, all right, International Financial Reporting Standards. So what's the difference between generally accepted accounting principles and international financial reporting standards? You know, GAAP is primarily used in the US, whereas the IFRS is international. Okay. GAAP has rules that have to be followed. Where the IFRS has more principles that need to be followed. I mean, think about it from this perspective. It's if you had apples and oranges, all right, it's hard to call it, make them equal. Okay, so and you can have a car dealership on one side of the street and a car dealership on the other side of the street. And because they're their own businesses, they wanted to, just because one's Chevy and one's Ford or one's Nissan and one's Toyota or whatever, doesn't necessarily mean that their business is run the exact same way. So principles and rules have to be set up in order to make not apples and oranges, but keep everything alike, oranges with oranges, okay? But it's hard because all businesses are different. Let's face it, pizza franchise is very different from, an automobile dealership, which is different from a hospital, okay? So, with businesses being so different, it is hard to put into place a set of rules and principles that can be applied against all businesses. And that's why accounting is about understanding the concepts and the principles and the theory and then applying it to the situation. And when we look at the US, being it's, the number one country in the world, of course we want to control, what goes on in the US. Internationally, I mean, you have all of these other smaller countries. Does Spain care what France, when they deal with France, they're in the same place, dealing with Germany, you're only talking about a border here, okay? It's sort of like the United States versus Canada or the United States versus Mexico. They're almost alike, but when you go overseas, everything can be very, very different. So in order to create international trade, and today, think about China, all right? They run by a whole different set of rules. I mean, it works for them. It doesn't, you can't expect the entire world to be exactly alike. I mean, it would be great if it is, but remember, cultures grew independently of other cultures, and so they created, methods and things that work for them, which can be very different from us. And that's why you have, the GAAP, for the United States, and then IFRS, for international. Okay. Also, too, you're talking about the basis of what you're using. With GAAP, they have a tendency to use historical cost as a basis for their methods of valuation, where with the IFRS, they have more of a tendency to use market value, right? And you've seen this before in our costing methods, right? Lower of cost or market, right? You've seen this in the previous chapter, in chapter 5, this idea of cost or market. Well, cost is, is historical, more closely followed by GAAP. But market is more closely followed by the IFRS. Right? So there are differences between the two. Here in the United States, we're primarily learning about GAAP, but if you're an accountant, or if you're doing business internationally, I mean, business managers who are listening to this, even though you're taking financial accounting, realize that if you go to a company, you go to work for a company like, say, Caterpillar, who make the backhoes and, things like that, or even a company like BMW, okay? These are international companies, okay? And if you're a business manager, you need to know about the IFRS because you're dealing internationally, okay? And granted, these are large businesses, okay? But if you're a business manager, you may end up working for one of these companies. And accountants, obviously, the same thing. But on a smaller scale, let's say, you're talking about a small business. Well, if you're in a small business, most likely all you need to be concerned about is GAAP, okay? But it doesn't necessarily mean that you should just ignore learning about the IFRS. If you've heard me before, occasionally, and this is from my own personal experience, in my hometown there is a company that creates O-rings for jet engines, okay? And that's all they do. It's just O-rings for jet engines. So they buy aluminum, blocks of aluminum, they cut them into O-rings. Well, those those O-rings are international, even though it's a small business. All right, in my local town, not only do they have to deal with GAAP, but they ship that stuff internationally. So even though it's a small business, it only has like 30 employees, but they ship overseas. And today with the internet and the way we can ship via FedEx and UPS, and having that global economy nowadays becomes much more important to be able to understand what's going on with the IFRS. And I know for myself, personally, years ago, when I had got my degree in accounting, we kind of just focused on GAAP. But now as I see iterations of the textbooks, you might be in like the 16th edition. Well, when I was in the 5th edition, it was only, they focused primarily on GAAP. But nowadays, there's a much more heavier weighting for the IFRS because of, the way, we're becoming such a bigger global economy. So don't, when you're studying this chapter, make sure or throughout any of the other accounting subjects or concepts, make sure that you do pay attention, somewhat to the IFRS and pick up that information, because going forward, it's going to be much more important for you in your career. Right, so with that said, we're done with these short exercises, and we don't have to do any of the exercises or problems for this chapter, because this chapter is pretty much about theory, concept, definitions, that type of thing. Make sure that you do go back over all of the material in the book. It is important to understand things like separation of duty and fraud and embezzlement and blah blah blah. All right, but we're done with this chapter, and we'll see you all in chapter 7 then.